What's up, everybody? Dave Bartosiak here, and we have yet another chart of the day for you. This time, we're talking about Celestica, ticker CLS. Now, why on earth am I talking about this company? Well, we've got earnings coming up, and I'm the big earnings guy here and surprise trader. And what I'm trying to do is, rather than just have a rear view mirror on these things and say like, oh yeah, this is how they reacted to some big news. I want to kind of cue you in on, some potentially big moving events and what the chart's saying ahead of that. I feel like that might make a little bit more sense. Okay, so Celestica has earnings tomorrow, a big virtual investor meeting too. So you got big news. Now, what's up on this chart? So a couple of things I'm already here clicking and clacking and highlighting. As always, my 50-day, my 200-day. Got the swing high here in July. So that was 63.49 for the stock. You notice the breakdown below the 50-day. And that's something that hadn't happened for the stock for a while, right? Plenty of support bouncing along the line. And then you have a new high. And then we crash down through that 50. And shouldn't come as too much of a surprise that when you have a stock that's been that strong bouncing along the 50-day, you typically do get support at the 200. And that happened twice. The rejection here. So heading into this, even before this report, you had this contraction of the range above the 200-day and below the 50-day. Okay. So this is really good action, I think, for a stock. It's great to trade something like that because you get a few moves in there. And then you also have the breakout from it. I mean, this is just so textbook. It's beautiful. Breakout above that 50-day and then another retest and then another buy. So from a technical standpoint, it's very bullish that it broke, retested, and went higher. Okay. So that's a great move. However, that phase sort of shifts here now because you took out those highs. Intraday did not close above them. So here on October 14th, stock gets all the way up to 64.56, ends up closing at 63.16. So 63.16 is below the closing price of that July 16th day where it popped up to all-time highs, right? And then the low was even lower. And then now what do you got? You got 1, 2, 3, 4, 5, 6 days of downside action heading into today, right? So I think smart thing to do is draw a little fib here, check out if we've gone 50%, and we sort of have. So next level's 55.02. Now heading into this, the options market is pricing in something like, I think it was a 10.6% move I saw last night. So if you just kind of quickly eyeball that, $56 stock, so that's 560 is about 10%, right? So if it's 56 and change, minus 560, you're talking down 51. And guess where the 50-day moving average is? That's right, 51.81. So essentially what the market is saying is that, all right, well, there's a pretty good chance that we come down on the downside and retest that 50-day moving average. And to the upside, if it gets nice, we're talking, 62. So what I'm going to go out and say, I'm going to say that the upside move at 10% is too small, or at least maybe the initial reaction is too small. So it's likely to take out these highs, right? If it does have a real positive reaction, it's going to take out those highs. And if there's a negative reaction, the 50-day should definitely come into play. But I'm going to say that what I've seen more often is you get these gaps down to that support, and then intraday or the next couple of days, you find the next support level. So I think even that 10%, maybe that's just like I said, first initial knee-jerk reaction. But a week out, I'm thinking that extends to the 50-day and the all-time highs up here. Okay, so that's sort of a bigger window. That obviously, more room for error in a bigger window. Yes, I understand that. But these are also sort of safer entries. So if you're looking to buy the dip, you can peck at it at the 50-day. And again, this is assuming the reports are decent. So that's one thing we do a lot in a surprise trader is you'll have a report that comes out and it's a good report and you see a dip. And then I tell people, hey, this is something you should be looking at adding because the report was good. And there's just somebody that had better seats than us that ended up selling on that day. Because what you get is a lot of institutional money will run in when the stock reports because there's going to be higher volume so they can trim their position. And what have we already seen heading into this? You got a couple of support, big buys down under that 200 day. So they still kind of want it to go higher. But when you zoom out on this thing, that's when you start to get a little bit nervous because you're like, wow, this is a stock that was $10 May of 2023. And here we are in the mid 50s. And you can kind of eyeball and see there's already this sort of range. Now, granted, this 200 came into play, but this is really the bottom end of the recent range. And then, a couple of tops here that have been carved out. But you can kind of see what we're talking about, right? So I think the market really wants to keep it above that sort of 52 level. If it does break down from there, then, the 200 is one place to back at it, but odds are it goes lower. It goes down to the bottom of this range, somewhere in the 42s, if things really start to get ugly over the course of the next few weeks. Granted, I'm optimistic on the stock. We do see it's had some decent news lately. There was a positive earnings ESP heading into the print. It is this Zacks rank number 3 hold right now. So from that standpoint, kind of neutral on it, right? Cautiously optimistic, I think, for the move. So just keep those, on your mind. And you can also see here something we've seen with the rest of the market, volumes really drying up. So this is drying up while the stock is going down. So that just tells me there's sort of a lack of buying interest here, right? So there's definitely somebody taking a wait and see approach, and compare that with this run up in volume till you get to the all-time highs. And now you have a dearth of volume as it's sinking down below. So I'd be more concerned if these were higher volume candles forcing this thing down. But since it's, just a little bit of volume and it's trickling on lower, I think that's more just, buyers sitting on the sidelines versus anything more nefarious than that. All right, folks, there you have it for my chart of the day. Be sure to follow the author here on Zacks.com. Subscribe to the YouTube channel and come on back tomorrow because I've got another one tomorrow for you. Not sure what it's going to be, but it'll be just as cool as this one. So for everybody else here at Zacks.com, I'll say thanks for checking us out and we'll see you all tomorrow. Thanks.